This is Market Day Report. Glad you're with us as we work our way through the markets. Now, it's been pretty quiet in the row crop markets, so before we get to those, let's start with the equity markets. Dow, NASDAQ, S&P. Now, the Dow the Dow was lower yesterday. NASDAQ and S&P were in higher territory, and we start the morning with the Dow moving higher right now. Also, NASDAQ, looking at the futures for the NASDAQ, they are in higher territory, and the S&P signaling the same exact thing. Now that we have the equities out of the way, let's jump into the row crops. We'll hit the big ones here. December corn, 3 3/4 cents lower, 4.14 1/4. Soybeans, we've been lower here as well, off 8, 10.23 1/2. Wheat market, we'll just look at Chicago. Everything else is following this one. It's all lower, down 6 1/4, 5.15 3/4. And even the cotton market, is it higher? No, down 32, 65.89. Let's go to Chicago. Vice President Zaner Ag Hedge, Ted Seifried. Okay, Ted, quiet. What are you watching?
I mean, we're quietly lower, Tony. We had some talk or some concerns about some frost overnight, and we're trying to assess the damage in Minnesota and South and North Dakota. Although initial reports are it got down to 32, not for a terribly long time. Did see some pictures with a little bit of frost on the very top leaves of soybeans. But at the moment, we're not feeling like there was a whole lot of damage done. At least the market doesn't act that way. Because like you said, we're down just a bit here. And, with all the strength that we had seen at the end of last week on frost concerns, on, just overall disease concerns, and this crop is getting smaller, we've given back a lot of that strength here just in the last couple of days, kind of based on the idea that, soybean demand, we're still not seeing any exports for China. Yeah, we have export sales tomorrow. Maybe something pops up in there. We really need it. But the feeling in soybeans right now is just like, well, maybe the crop is walking backwards. Yes, we saw crop conditions drop 4%, on Tuesday afternoon's crop progress report. But if we don't have anywhere to sell it, Tony, maybe it just doesn't matter. And so it's just, we need to see some of that Chinese business pop up. And once that happens, I think we can be talking a different tune. But for right now, it's just a really big disappointment for the soybean market, and that's been kind of leading the way lower. Corn's been sort of following along as we get ready for the USDA WASDE report next week. Knowing how the USDA calculates yields in this report, it's ear count. And there's a concern that they're not going to really incorporate in the problems with disease or even dryness as far as, kernel weight, test weight. So could we actually see yield go higher on this upcoming report? I don't think we will, but I think that is a bit of a concern for the market. So yeah, just, at the end of last week, we were really looking very strong. In the last couple of days, it's kind of feeling like we're failing at some key resistance here, Tony.
Yeah, and I think it's a good thing to look across the entire spectrum and say, okay, these are things we need to be watching right now. Market might be quiet, but these are things that could jump out and surprise you. We talk cash cattle, but we also need to talk show list. In the South, Texas, it's larger this week. 2 straight weeks of larger show list, but a little tighter in Kansas and Nebraska. Now, live cattle futures still in the red. We're down $1.25 front month at 237.07. Feeder cattle been lower as well. We're off of the lows right now at 361.15, down 92 on the front month. And then hogs look like they could do higher for the 9th session out of the last 10. October hogs 95.17, up 137. Ted Seifried's with Zaner Ag Hedge. Okay, cattle, hogs, cattle, hogs. What's your focus?
The cattle market has been where, the cattle complex has been just so interesting for so long, Tony. And I'm assuming every time you do one of these talks, you're wondering or asking analysts, is the high end? We're all asking ourselves the same thing. We know that the underlying fundamentals are still rather bullish. We have a lack of animals, and we have a lack of way to replenish them with the border being closed and with just heifers not being kept back for breeding. So that story doesn't really end, but at some point we wonder at what price are we just, do we have all this factored into the market? And when are we due for a correction? With the funds being as long as they are, at some point they might like to look to take some profits, and that could cause a bit of a correction at that point. We've just not seen it pretty much through the life of the rally that we've had in the cattle complex. I'm going to say, though, you have cattle charts, both live and feeder cattle, that look like they are rolling over. By that, I mean we have kind of a rounded top at the moment. We need to go out and take out last week's high pretty soon. And I'm thinking either, well, today, although, like you said, we're down, but off our lows. It's got to happen today, tomorrow, or early next week. Otherwise, your technical traders, i.e. your funds who are very long these markets, might look to do exactly that and take some bigger profits. And by the way, if I look at the August feeder cattle market, it could correct back down to 335 from where it is right now at 360 and still be in this overall bigger, broader bull trend. So, when you get up to these higher prices, you can see some big moves, but that still stay within like a percentage standpoint and stay within a trend line. But either way, that chart looks like it is putting in a bit of a rounded top here for the moment. So that's something that we need to be watching for. It can take that out, but if it doesn't do it soon, that might find some profit taking and some selling follow through.
Yeah, great point there, Ted. Ted Seifried with Zaner Ag Hedge, and that's how we're trading on your Thursday.
All right, a lot to keep up with. Thanks, Tony.